I'm going to talk to you about student loans. Student loans are a form of financial aid that helps to cover the cost of an education at a post-secondary school. Because student loans must be repaid, I always caution students to only apply for student loans if you absolutely need it and after you've exhausted your free financial aid options, such as grants and scholarships. When you're ready to apply for a student loan, students must make sure they first have completed the free application for federal student aid, or the FAFSA form. Students will then also want to complete a master promissory note, which acts as the application to actually apply. In addition, students will also complete an entrance counseling. And what that does is it helps students to make sure that they're aware of their rights and responsibilities before they borrow. Now, here are the types of student loans that students can choose from. There's a direct subsidized loan as well as a direct unsubsidized loan. Direct subsidized loans allow the student to borrow a student loan while the government picks up the interest for them when they're enrolled in school and then up to 6 months after they've graduated or at least left school. That's called a 6-month grace period. In addition, in order for a student to qualify for a subsidized loan, they must have what we call financial need. And financial need is determined after the student has completed that FAFSA application. When we're talking an unsubsidized student loans are available regardless of financial need. So the student doesn't matter what the student's financial strength looks like in their household. All students are eligible to apply and receive one. The student is responsible for the interest that accrues on an unsubsidized student loan from the date of disbursement. So you always tell students to make sure that they're only borrowing what is needed because they do have to repay this loan, and quite often with interest. Student loans, when we're talking subsidized or unsubsidized, come in the student's name. No credit check or any collateral is needed in order to get the loan. But again, they do have to complete the free application for federal student aid as well as the master promissory note. Repayment begins 6 months after graduation, and the interest rates will be set July 1st of every year for a new borrower. Current rates for the 2021 academic school year consist of 2.75%, and then the origination fee, which is always taken off of the top for this academic year, is 1.05%. And again, interest does accrue from the date of disbursement on the unsubsidized loan. Interest, I always tell students, interest that's not paid prior to you going into repayment will be added to the principal balance. So you'll pay a little bit more if you're unable to make your installments. So if you're able to make monthly installments or even pay something towards the interest, go ahead and do so. Now, the next type of student loan is what we call a Direct Plus loan. Direct Plus loans can be taken out for graduate and professional students as well as for parents, which is the most popular Plus loan, and that's the one I'll be talking to you about. So a Plus loan, or parent loan for undergraduate students, is a loan that is in the parent's name and the student has absolutely no financial responsibility with taking out this loan. In order for the parent to be approved, they must meet credit requirements. Monthly installments will begin 60 days after disbursement, but the good thing is the parents can choose to postpone those monthly installments while the student is enrolled in school. Parents can borrow up to the cost of attendance minus any other financial aid received. So it basically can cover all outstanding expenses that the student may have. If a parent is denied a Plus loan, they may reapply with a cosigner, or the student may actually borrow up to an additional $44,000 or $5,000 in their own name with the undergraduate student loan. Interest and origination fees for the Plus loan for the current 2021 academic school year are 5.30% and 4.228% respectively. Again, just like the direct subsidized and unsubsidized loan, interest rates are reset every year for first-time parent borrowers. Now, here are where our undergraduate loan limits are. The loan limits for a first-year student consist of $5,500, of which no more than $3,500 may be subsidized. For the second year or the sophomore year, a student may borrow up to $6,500, of which no more than $4,500 may be subsidized. Third year and beyond, the student can borrow slightly more, which is $7,500, with an aggregate total of no more than $31,000. Independent students or dependent students whose parents are unable to borrow a Plus loan can get slightly more. Their first year, they may borrow up to $9,500, of which no more than that is still $3,500 in subsidized portion. And the amount increases slightly every year for an independent student with an aggregate total of no more than $57,500. Graduate and professional students have a maximum of $20,500 each year. Now here are a few loan tips. For a few loan tips, I always tell students never borrow more than what you actually need. Again, you must repay this student loan debt, and you also are going to do it with interest. So again, you don't want to borrow more than what you really need. If you're not really sure what it is that you need to borrow or what your monthly installment will look like, I encourage students to visit mysmartborrowing.org. That's one of our many websites that we offer to help students figure out what they'll need when they're planning to go to a post-secondary school. My Smart Borrowing allows students and families to actually key in what their expected salary, what they think their expected salary will be. It factors in some savings, pulls in the cost of the school, and tells the student how much they may need to borrow and whether they're overborrowing or not. It also is a great way for a student to review their loan balances every single year and know what their monthly installments will look like. I also tell students to check out other repayment calculators to help them determine their estimated monthly installment. Some good repayment calculators include the Studentaid.gov or finaid.org. If you're a parent, you want to ensure that you can sustain your loan borrowing. So whether you're borrowing for your child for the first year, maybe you have a second student that you may need to borrow for, be mindful of how much total debt you could take on as a parent borrower. Maybe you have your own student loans or you're planning for your retirement. You don't want to take on more than what you can really afford to repay back, considering you may be getting closer to your retirement age. At the end of the day, I wish you all the best of luck in making the best decision for you. Again, never borrow more than what you need. And if you need some help with that, mysmartborrowing.org is a great resource. Best of luck to you, and thank you.